Okay, welcome to the Real Estate Investment Club. This is Wednesday, another Wednesday with a webinar. Today I decided to invite one of our good friend Gary that I met a few months ago. But before we start with Gary, I'm going to take you through very basic information that I always participate here. Now, the goal of this real estate investment webinar here is to inform you with information you need. This information would equip you to get into the market and win anytime you step forward for real estate investment. So the goal here is to move you from average investor, or what I call speculators. You buy one property, you call yourself glorious investor. That is not always the case. So the goal here is to get you to a different area, which we call savvy investor. And being savvy investor would help you to stay strong and always win, and you're not going to fall into the game that the market or the media plays on you, and you're going to be blown up with any information win. This is one of the information that came up on May 21st. And it was saying CHMC's gloomy outlook up to 18% drop in home price. That was May 21st. And surprise, surprise, surprise. I checked the market yesterday. The market was up. Gary, can you see my screen?
Yes, sir.
So looking at the seasonally adjusted means from May to June. What is the nice big number on the bottom?
Well, no.
9.8. You see it? Okay,
Yeah.
I tell you, it's 9.8. So this is a stat I pull out from Toronto Real Estate Board. It said the average price, selling price, last year, 2019 to 2020, and these are identical month, June. Compared to last year, the price of properties went up 11.9, and I can easily tell you why it went up. Seasonally means from last month to this month, everybody thought the market would crash, including the prediction from CHMC. Well, surprise, it went up 9.8. Now, those people that I talked to a few months ago, they are crying why they didn't invest in real estate. I keep informing, I keep sending all this information. I keep insisting people do not just listen, see the numbers for yourself, do your investigation. Ask for second or third source of information. Do not just sit down and cry when the market the media said the market is going to crash, it's the end of the world. That's where you're losing, and that's why you should not be an average investor, but you should be a savvy investor. And here's where the average investors sit down and cry. You see all those hiccups up and down all through the years. That's where an average investor sit down and cry. The savvy investors looking at the orange line, which is solidly moving up. Yes, it has a little bit bump here and there, but you are buying it with all your wisdom and knowledge and data and information that you have. And welcome to our guest today, Gary Caspers. I got this picture, don't ask me where I got it from.
That's fine.
Gary is a friend of mine. For the last few months, I was talking to him regarding his approach to real estate. And he's not a real estate agent. I am a real estate agent. I have 15, 16 years in investing. And even before I become real estate agent, which was necessity of my task at that time, I was seeing so many homes. And I said, you know what, I better get my license. I don't want to bother my wife. She was an agent. Gary is not an agent. He is actually in financing. And it's interesting story. Gary, why don't you open up and tell us briefly, like within a few minutes, why you started, what you do, and where you started, what is your background, etc. And here's the grant for you.
Sure. Well, thank you very much. My background is very, very simple. I'm a market research analyst by background. I specialize in trend analysis. So we used to do projects for clients, trying to help businesses understand how to maintain their clients, how to increase their basic clients, how to increase their brand, their loyalty, the profit margins, who are the demographics, the attributes, the behavior patterns of people that are buying their product now and in the future. And that's what I'm good at doing. I can take the trend lines and I can forecast them in like you're doing with your charts before. I have my own trend line analysis that we can make our decisions with, and try to hopefully make decisions that when we look backwards, when we look back, we can join the dots and say that was a good move. I was just a person who was making good money and paying a lot of taxes, but I just didn't feel that I was getting anywhere. Putting kids through school and so on was all costly things and mortgages. And I had my money invested in various with various traditional routes, and I was just looking for a better way. I came across a government report, which I don't know if any of you guys can see, but anyways, here it is right here. It was a government report that was commissioned by the previous government, Minister of Finance, on Canadians and their money and why Canadian financial literacy exists. This report sat on my desk for about 4 years because I didn't have a client to charge billable hours to, so it didn't go very far. But what I did do about 4 or 5 years ago, I took this report with me to a college with some friends, and I started to read the executive summary, and it's actually quite a sad report. They reviewed or interviewed tens of thousands of Canadians across Canada, trying to get a feeling of their attitude towards money, what they've been taught, what they do, their approach, their behavior, their attitudes, kind of the stuff I get into. And the alarming thing was, and if any of you there that are listening today that would like a copy of it, I'll give you my name and number at the end. Well, it's right there on the screen. You can take a picture of it, text it to me, and I'll send it to you. It basically says that the majority of Canadians, and this is a tough thing, Ashton, to understand, but the majority of Canadians are going to run out of money. Okay? Yeah. Now, and I like being, like you talk about, people making decisions. I call that drama. I am not into the drama. I'm into the data. If you want drama, I tell everybody, watch CNN, you get lots of drama, and come back and talk about data. So I'm into data, and I want to know why this is happening. What's causing Canadians to come here, work hard, do what they're supposed to do, get a mortgage, pay that off, so on and so forth. We found that the majority of Canadians are losing 40% of their hard-earned income to taxes, another 40% to mortgages, leaving them just with 20% for everything else. If you want more information on this, you can contact us, and we have some videos and things we can share with you. But
do you want me to share this? Do you want me to share the screen or not yet?
Yeah, not yet. It's fine. So what happens is that basically this 20% was left over, and it wasn't working because people were on a journey of saving their money, not to hopefully retire at some point and hopefully don't run out of money. And statistics are showing, unless you know how much money you need in retirement and you know how long you're going to live for, that experiment has failed. So we went and researched all this, and we have a lot of research that we've compiled. We have some tools like documentaries, we have books, we've got other tools that we're helping people understand it. And part of that is real estate. So today I'm going to be talking a little bit about one of the vendors that works with our academy, and they provide to us opportunities in the US. So if you'd like to share the screen with me, I'll pick that up. And
let me try.
Just gotta flip it over and share it with me.
Okay, so you have to help me here. What to do?
You just make me the host. Put your cursor over my picture. 3 dots will come up on the right, and it'll say "Make me the host," and I can go and do it.
Make host. Do you want to change the host? No. Oh, okay.
Got it?
I'm almost there.
No problem.
Yes. So you're the host.
Lovely. Lovely, lovely, lovely. Okay, wonderful.
Perfect.
Nice. Okay. So let's open this thing up. I don't know why it wasn't open, but it will do. There you go. Wonderful. So I'm going to talk to you a little bit today in the next few minutes or so, in the next 20 minutes or so, give you a snapshot of what we found as opportunities specifically to create cash flow. I think that the goal in life, the purpose of money that we see, the purpose of money in our lives is to create cash flow, to give us our time freedom, to do the things that we want to do with whom we want to do it. That's the purpose of money. I mean, there's no other real purpose to it, right? Because we need it to provide our expenses that we have, and also it provide us with the time freedom that we want to have. So we should be looking at how that recipe works and what ingredients are available. And today I'm just going to give you one flavor of one particular ingredient that I personally believe is absolutely the best available for Canadians to start with and to build cash flow in the most efficient manner possible. I'm going to try and share that with you. Hopefully you get if you get the same insight as this, and it kind of, you know, triggers some opportunities for you. Get hold of us. We can send you some information and you can check it out for yourself, okay? Because data is way better than drama, okay? And you should always find this out. So I'm going to talk to you a little bit about the advantages of Canadians to own US properties and as an owner, to be a property owner. There's a couple of big things that in the States that are to an advantage that most Canadians are unaware of. Most Canadians work within their province because most people are serviced by people who are restricted by their province or whatever and don't see what else is out there. Interestingly enough, my research tells me that the majority of wealthy people in the world have made their money from the business of real estate or the businesses that they are in that own real estate. And a lot of them have, most of the billionaires in the world have a big slice of the American pie. And I'll talk to you, and that's not apple pie and ice cream. I'm going to talk to you a little bit about it later. And it's an amazing journey if you understand it. If you're working with the end in mind, and then you work backwards and you create that cash flow, and it's a really simple philosophy. So what we'll do for questions, if anyone has any questions, you can hold them up. I don't know, Ashton, if we have time.
You can text it or you can just
send them over to Ashton and he can quarterback that. That'll be great. So basically what we're finding in the States is that I'm going to show you a little bit about some of the background. I'm going to give you some of these examples, some financing opportunities, and give you some applications of how you could put that into your life or start to explore it. Because, you know, once you've got all the data in front of you, then you can make a decision to say yes or no based on some facts. So you don't look back going, I should have done it. I personally met somebody 2012, 2013 in Florida on a family trip that introduced me to some properties in Tampa and St. Pete's. And I couldn't believe that this existed. I didn't know anything about it. I kind of didn't really know much about real estate. I'm not a real estate agent. So I learned from them. His name is Joe. They're from Markham, Ontario, but they live in the States, in Buffalo and in Florida. And his family owns over 300 doors, 300 properties, doors. And I learned a lot from them about the kind of properties to buy, the type of rents to get, and the areas and so on. I learned a lot because that's what I do. I extract data. I'm a data person. I extract trend line analysis, and that's what I did. So I'm going to try and share that with you a little bit today. And hopefully it helps you get some value out of the time that you're putting in with us today. And maybe in the future, you'll come back with your friends and add more value. Number one, in no particular order, but tenants have very limited rights in the States, okay? Unlike Ontario. Ontario, there's a whole circuit of people today that are giving landlords nothing but a run for their money. They're taking them all. I know someone right now who's got about 38 doors in Ontario, and one of the doors is held by a tenant that takes them to court every 6 months. And just before they get to court, they pay them a check and they have to do it all over again. And that's a fact. And I think Anton would, Ashton would tell us that that's the fact. It's a pain, and these people are getting together and they're creating havoc for the landlord. In the States, they ain't got no rights. You don't pay, the bailiff sends the money, change the keys, and you're gone, okay? Simple concept. The rules are very different. Also in the States, I'm going to touch on this a little bit more. If your property manager that you have has got the accreditations for it, and the people that I deal with who buy our assets for our clients as well as our own family, I really personally like it. It's called a Section 8 availability. In the States, if you have a certain income or a certain situation, you can qualify for what is called it's not necessarily welfare, but you're in a program. Maybe you're retooling your jobs, or you're moving, or you've got more kids, or the case might be. You can qualify for what's called a Section 8 rental. This is one of the coolest things I've ever met. I met a guy before when I was down in Vegas about a little over a year ago. I was at a tax show and real estate tax show in Vegas, and I met this guy, as you would at events, and just talking to him and stuff like that. And he has 800 doors. 800. First of all, I try to figure out how the hell do you get 800? In Canada, financially, they top you at about 4 or 5 doors. You can't get any more. You're done. Okay, that's the trick. They box you in here. I'm going to go over that in a minute. At 800 doors, and he said every one of my doors, Gary, has got a Section 8 renter in it. I get my money from the federal government. My check comes to the federal government, my property management team takes 10% off, and they put the rest in my bank account. I went, oh, this sounds pretty good. So there's a lot more to learn about this. This is just to give you a few little points. So Section 8 is available. The other big feature in the States is called asset-based financing. Now, guys, this is probably the eighth wonder of the world. What is asset-based financing? Asset-based financing is, in the States, they look at the project that you bring to the table. They look at the rent rolls. They look at the actual building. They look at the operations, the executive team. They look at the business plan, and they finance the business plan. Not necessarily you. You can get hit by a truck and you're gone. But will the project still be at the risk that the finance company is prepared to take to lend you the money? So that means there's basically unlimited ability to get doors for generations. Unlimited. So unlike in Canada, you go for financing and then they go, well, who are you? Well, my name is Gary. So what do you do? I'm self-employed. Forget it. You're employed? Oh, we'll talk to you. Like they have all these grids about you. In the States, it's asset-based lending. That's why these guys can have thousands of doors, massive projects, because it's unlimited financing. And once you get a few good projects behind you, you're home free. The other thing that they have, which is not on here, on your screen, which is absolutely amazing, is, you know, what happens here in Canada is, if you buy an asset, I don't care if it's a stock or a piece of real estate, and let's say, you know, you buy a piece of real estate through Ashton there, and he finds you a good property, and say you buy it for, you know, whatever. I'll just take a number of $100,000. I know you can't buy a garage for $100,000, but anyway, $100,000. And it goes up in value to $200,000 because of the location, the story, whatever it is. Now, if you sell it, you know you're going to trigger a capital gain.
Of course.
Right? That portion of that profit is going to be taxable to you. And that's kind of like putting your hands in the mousetrap. You're going, oh, I like it, but I'm going to get bitten, right? So you don't go with your gut and your data. You go with the drama, which is often a mistake in hindsight, and you won't make that decision to sell. And you can't really do much refinancing because you don't have asset-based lending because they're limiting you on how much money you can get. So you're kind of stuck there. I don't know if you guys get that in the audience. These are just salient points. They are very big when it comes to explaining the details. And we have other programs that we can help you understand, but it limits you. In the States, there's a thing called there's a section of the act. It's called a 1031. A 1031 allows you to defer your capital gains on a sale to your attorney as long as you buy another asset within a period of time and put those deferred capital gains into your next project. And how cool is that?
True.
So not only are you allowed to go and use your property and refinance it because it's asset-based lending and they open up the world to you, but you can then sell your property if you think it's the right thing to do and don't pay capital gains when you trigger the sale. So you can make the right gut change, the right gut moves. So right now, for those of you that know about a guy called Donald Trump, some of you might have heard of him, okay? He's the blonde guy that's supposedly running America right now. He is doing set up a system that most people haven't publicized. You can look it up. It's called the enterprise zones. Enterprise zones. So what he's doing is he's taking areas that he would like to develop structurally next to other areas, okay? And saying, okay, Ashton, you and your family got millions and millions of dollars of deferred capital gains. And then there are millions and tens of millions of dollars of deferred. No one's been paying the capital gains, right? For decades, right? He says, okay, you take your deferred capital gains and go and buy some property, infrastructure, roads, this, that, invest it into our enterprise zones, and we forgive you of your capital gains taxation.
Amazing.
That is so smart. It's unbelievable. So smart. Now, so see, America is really the home of the capitalism. I'm not sure if it's really the home of it here, especially with paying CERB to keeping everyone happy. So I don't know. About asset-based lending, it's absolutely huge. 1031 exchange, deferring your capital gains. I could go on and on. He's just giving me some salient points. Okay, and then having the government pay your rent check. Throughout this whole COVID-19, we haven't had any problems with our rent. Oh, that's not true. We had 1 week, the government was late by a week. I mean, you know, I was going to send a letter down to Donald Trump and say, get your shit together, excuse me, get your act together, but I didn't. I let him go for a week, okay? Because then it's been coming pretty close, okay?
So you're saying tenant in US, the government pays for them?
The government pays the tenants, and the rent voucher that they receive goes straight to the property management company.
Oh, okay.
So you don't even have to worry about rent. And because they're on that Section 8, the house is getting inspected twice a month, and the tenants have to keep up the standard, otherwise they get kicked off the program. And there's a lot of things that goes with being on a Section 8, right? So it's a really cool program. No one understands it. They don't know. And where ignorance is bliss, all the drama in the world, we don't have the data, no one's talking about it, and we're sitting 3 to 4 hours away from us. 3 to 4 hours away from us, and we don't know, okay? I'm gonna share some of it with you. Other big part, and I've skipped a lot, there's about 15 different points. I've just put 3 because you know, it takes a lot more than this to explain it to you. The creme de la creme is that, you know, wealthy people are people that have a lot of monthly cash flow. A rich person has a lot of money in different kinds of investment accounts. There's a big difference between the two, in the mindset, in the tools, and in what they do. But wealthy people that have businesses that create cash flow, they have real estate projects that they own that create cash flow, they know that the only way that they can survive and maintain and improve their wealth, which is that constant flow of creating cash flow, is from owning nothing. Listen carefully, people. Own nothing and control everything. Mm-hmm. And America is the only place where you can have your pie and ice, your slice of the American pie, because the legal and tax structuring that's available permits this to happen. That's why practically every billionaire that we've researched, and we've done about 86 of them so far, all of them have a slice of the American pie in their portfolio. Their holding companies are in some of the structures in the States. They're operating. It's because of that structure. So what a lot of people do in Canada is they buy. I've seen it. I've got a guy right now in Oakville. Well, you're in Oakville. He's Dundas and 8th Line or something. An engineer, retired engineer, did well, got into the real estate game about 15, 20 years ago, owns a portfolio of about 5 or 6 properties right now and got tapped out. Can't get any more money from anybody because he says that he's got too much debt. He's got assets making money, he's got too much debt. It's the strangest thing I've ever heard. So now his challenge is, you never get, guess what his problem is, Anton? Guess what his problem is? All the properties that he's bought are in his name. Mm-hmm. Ooh, nightmare. Nightmare. Capital gains tax. Here we come.
Yeah.
Nightmare. And the legal structure and the tax structure, they're good, but they're nothing compared to what you can have in the States. So anyway, that's just to give you a little flavor. Okay, let's just go in there and give you a sample. Okay, this house went in the first week of April. Okay, it's a house. This particular area that I'm talking to you about is in an area called Michigan, in a state called Michigan, and in an area around Detroit. Now, before any of you decide to hang up and get off the phone, off the website, because you're going to go, Detroit, crazy, I'm going to, it's a great, I have a document that I can send to you that was done by the Chamber of Detroit in December of last year, that talks about Detroit and what's coming back after going bankrupt. It's one of the fastest cities in the States. Warren Buffett bought just half of Detroit right now. That's why he sold his 4 positions in the airlines to show up his financials to buy what he bought. Over 500 tech firms have come into Detroit, including Microsoft, LinkedIn, Google, and WeWorks. They're building a new bridge next to the Ambassador Bridge. It's going to be the Gordie Howe Bridge. And data is kind of interesting, eh? And a new bridge. It's called the Gordie Howe Bridge. It's going to be for autonomous vehicles. So driverless human being trucks can go over that thing. That's in the project. GM, Ford, and Chrysler put multi-billions of dollars into infrastructure in that area to build autonomous and electric vehicles. Donald Trump cut a check for $5 billion. This place is booming. Right now with COVID, it has got its challenges, but like everywhere else, but the infrastructure. There's more cranes. Go and see. Go to Windsor. You can't cross the border, but you can go to Windsor and see. There's more cranes in the sky than Chicago, New York, Toronto combined. So something is going on. Okay, here is a property. Hopefully you guys can see all this. Can you see the right side of this thing? I think.
Yeah, we can see it.
So here's a property That is turnkey property with the company that provides these things to us. This is one of our members at our academy bought it for their daughter to put them through university. Okay, so it's $55,000. So this is all US. The 55,000 is really strange. No one even understands these numbers. You're so used to seeing like 2 million or something strange. So here on a line of credit, and on the right side, on the top right, if you put this house on a line of credit, there's loads of people that have got money in their houses, in the basement, not doing anything, totally inactive, haven't really figured out a positive way in how to get that money up and do something. So here, that 55,000 is about $70,000 US, Canadian. Say at 4%. I know a line of credit today could be less than that, but let's say it's 4%. That means your interest on that is $2,200. Okay, so you go to the bank, you set the paperwork, they give you 70 grand, you pay them, $2,800 a year. If you're in a 40% tax bracket, you're going to save some taxes on that money because that interest is tax deductible. Mm-hmm. And there is ways in how to double the tax breaks on it, but I'm not going to go into that now. But just call about a single one, so you can get all the money back from the government. But so then that's going to bring you down to after tax of about $140 a month. So then you put that into this asset for 55 grand. This is a 3-bedroom. You can see on the columns on the second column on the left. It's a 3-bedroom, 1.5 bath. It's fully renovated, top to bottom. It's been inspected. This is a Section 8 rental as well, and it pays out $950 a month rent. Now, if you take away taxes and you keep going down, look at the expenses. If you guys need more information on this and you want more, you can contact us and we'll have a side conversation with you and see what you need and show you we've got videos on this, we've got documents on this, we've got all kinds of things. So you can really do your data research to make your journey fruitful, hopefully. As you can see, you pay taxes, insurance, a property management fee, 10% is property management fee, and insurance. That's actually a little high for insurance. Insurance is about $60 on that, but that's fine. And total expenses is $280, $262. So your net is close to $700 US, which is close to about $900 or so Canadian. Mm-hmm. Now, how many of them do you need to be able to make working optional? I didn't even come to the best part of this yet. This is just part one. There's 6 parts. I'm only doing 2 today. So this is part 1. So understanding that these are wonderful opportunities. Now, I'll give you another part. This is a tax strategy that we have. I'm also a bit of a tax specialist. There's a strategy called an RSP plug-out tax strategy. Now, guys, if you do this on your own and you screw it up, don't come and talk to me, okay? You need to understand, it's in the Income Tax Act. They tell exactly how to do it. You just have to know how to line up the ducks in the right order. It is not difficult. You just have to do it right, okay? But you can do this. So let's say some of you right now that are listening have RSPs. Somebody out there has got this $3 trillion worth of RSPs that the government says that people have invested in RSPs. Now, if you use your RSP and if you remove from your RSP, there's a way to do this, $234 a month in this particular case. That over 12 months will pay the $2,800. So you're taking that. So you're taking that money out of your RSP. It's going into your bank account at the beginning of the month, and at the end of the month, the money's coming out to pay the interest that you've used on the line of credit to buy this asset. Are you with me so far? Yeah. Okay. Good. Right. So you're taking the money out of the RSP. Now, when it comes to tax season, tax time, you're going to get what is called a T4A. Mm-hmm. A T4A is RSP income. So you're going to get income for about $2,800. But you got a deduction because you borrowed money with intent to make a profit. The government says deduct it all day long. So the income and the deduction neutralizes the tax. Voila, voila, voila. Wow, wow, wow. Isn't that?
So are you pulling the money out of your RSP?
You're put in this particular example to fund this deal. This is one way of doing it. Okay. So you could take money out of your RSP and use that to pay the interest cost, because at tax season, the income from the RSP, the tax deduction of the interest neutralizes the tax. Okay. So how many families that we have where parents or grandparents have got money in RSP sitting there paying tax when they pull it out and pay full tax when they die? And they're saying, hey, listen, what strategies do we do? And that's what we do at the academy. We teach people strategies how to optimize their cash flow. And grandparents are using money out of their RSPs to pay the interest in the family for assets like this. Imagine grandpa's got money in an RSP and he says, okay, I'll put out $234 a month and my grandson's going to own this property. I can do a line of credit. The parents can do a line of credit. Someone can do it. We can buy the asset. They get $950 a month. I'm using the RSPs to pay the interest. Nah. And that's creating for you $900+ a month in cash flow. And you're learning something. What do you learn with an RSP and a mutual fund and stuff? Not too much. Now you learn about how to handle tenants, how to handle the bank, how to do the taxes, how to do the landlord. You're learning some skills that you can only develop on and grow with and train and help other people.
Gary, one technical question. Is it a possibility that you grab that, because it's generated in US, that income per month? Is there any shelter that can go there without coming to Canadian?
You didn't look at the previous slide, did you?
I did. I have it from you.
Didn't own nothing and control everything. That's how you do it, right? So of course, what you do is you hold the assets in a legal entity, and that entity's got 4 or 5 components in it. It's been done by every foreigner that buys assets in the States. Okay. Yeah. And it'll allow, and in the States, you can do a lot more write-offs. So basically in the first 7 years, you're not going to pay any tax on the asset. And then what are you going to do? You're going to refinance the asset. And I'm going to get into that right now. So you're going to have refinance that and keep doing it over and over again. Why would you ever want to sell this asset? If this asset even went up to, this asset was about 74, 5, 6,000, 6,000, I think it's 20, this was a COVID deal. It just was, it came up and boom. So here's another house. This one was done by a guy called, one of our clients, members, Colin. It was his first property. He used his line of credit. He's got a house in Ottawa that has got, wow, I'm not even sure, about $800,000 or $900,000 of equity in it. And we got a line of credit set up, prime plus 3, I think he's paying prime plus a half or something. I'm thinking something like that, maybe about 3%. Yeah. Okay, so he bought this. It was 91.5. Okay, about 120 grand Canadian. Bought this house. Completely renovated, Section 8 rental, government rental, cool. And the federal government likes houses that are being offered to their tenants that are clean, completely renovated, because they don't have any liability of issues, right? So they like that. And there's a lot of people that like this. They're not doing it's not like a lot of landlords that do bandage jobs just to get the house rented. You know, put a slab of paint here and a fix there. This is top to bottom, soup to nuts, done, okay? So this one comes in, as you can see, their rental income of $1,100 a month. That's that one, okay? $1,100 a month on 120,000. 120,000 today is a little over $300 gross a month. In interest after tax, $200 a month. Boom. But it doesn't stop there. It gets a bit better if you've got the data. Here's a view of the inside of the house, what the finishes look like. The companies that we deal with that provide us these assets do full turnkey. You get videos, you go see it when you're allowed to cross the border. It's not too rocket science. We tell people don't love the house. It's just a tool to make money. Oh, so I forgot to mention, in Michigan, there is no rent control. In Michigan, they bring their own appliances. I mean, how does it get any better than that? This is what the finishes look like. Maybe you wouldn't live there, but it rents nicely. Right? Maybe. Not bad. Not bad. Clean, simple, nothing too confusing. This is the outside. The shutters, that was before the shutters were painted. Okay. And that's the back, the new windows put in the back, thermal windows in the back. That was that one sample, okay? Now, this house, this is the actual appraisal. Now, appraisals and everyone were closed down through basically April and May because of COVID, right? Yeah. So now, as you can see, that for this house in Kentucky, that's what 19341 Kentucky, they did an appraisal on this property, and it came in on June the 23rd. You can see in the middle of the screen there. Can you see that? Yeah. Okay. It came in at 130 grand. Okay. So now you're buying a house that's got built-in equity. What good is the equity unless you use it, right? Mm-hmm. Collateral not being used is wasted. It wastes your working capital. It wastes your cash flow. It wastes everything. Use whatever collateral you can get your hands on. Okay. This is the appraisal that came in. Very, very cool. So what does that mean? Okay, I did this in big writing so you can understand it. Refinance high, buy low, strong government rental. That's the magic potion right there. This is what I look for all the time in our lives, and we try to get it for our members and clients all the time. So let's say you bought that house for 130 grand. I mean, $91,000. It's worth 100. Remember we said it's worth 130,000. Got it? 130,000. Okay, cool. Right. So what you can do is right now the refinancing is coming back. Thank God. It was a rough 2 months, but now it's coming back. Canadians can get 70%, up to 70% refinancing on an asset. Now remember, this asset was purchased with Canadian funds for cash. He used his line of credit to buy it. On the books, it has no debts. It has no mortgage. It's clean. Got it? So what that means is the appraisal came in at 130. He can refinance that property and get up to 70% of 130, which is $90,000.
Yep.
So he basically can pull out all his money. Now, this is going to take about 3 to 6 months to do, okay? It's not going to happen overnight, right? But that's not a bad idea. So you're carrying your line of credit for 3 to 6 months. Big deal. Now you pull out the money. Now the rent produces enough cash flow after the refinancing expenses. You got enough rent to cover the refi and still leave you with about $400 to $500 a month in this example. It's about half. You lose about half the rent check to the expenses, okay? Now, the next step that you could do. Now, remember, what's your goal? Your goal is to create cash flow so that you have security of cash flow in your life so you ain't worried about COVID-19 or 20 or 21 or whatever the hell it's called. And you ain't worried about, you'll have issues with rental property. I'm not saying no, but you can then look at the opportunities to refinance, to defer capital gains, is to go into asset-based lending. There's a whole bunch of things that you can do to help you get out of tricky situations. You can use that $90,000 that you pull out as a 30% down payment and access another $230,000, which is the 70% as a mortgage. That will give you another total of 320 grand for more rental properties. Or maybe you pool together with 10 other people and come up with 3.2 million and get into a plaza or a medical building or a multiplex or something. Don't know, whatever's available, right? So that produces more cash flow after your expenses. And the reason why they'll do that is because they'll do the refinancing because that asset's got no loans on it, and they'll asset-based lending, no problem. And then now they'll use that as a 30% down payment. You get another 70% on the mortgage. You're laughing. I mean, and how did that start? It started from one lousy $90,000 house, and all of that, and that's costing you a couple of $100 a month.
I have a question here for you. You said one of our person here said, why Section A versus market rents? Other than guarantee income, is there a trade-off rent below market?
No. Okay, great question. I had the same question. Section 8 is a market rent that the government's prepared to pay based on the house. So the house gets approved and they get pay market rent. Okay, so it is no different. So you can get a cash tenant if you like. I just like Section 8 because it's coming from the government. I don't want to have vacancy months. I don't need that aggravation, and I just don't want that. But it works out almost to be the same or slightly more because the houses are completely renovated. And see, from the government's point of view, they have to watch a thing called liability, because if people slip and fall on their properties, they can be sued. So they want to make sure everything is really clean. So it's a higher level of standard of renovation work, which is really good, and it's a higher standard of checking because they come in twice a year. And so, but the rent is what I'm showing you here is all Section 8 rentals, okay? And that's a conversation you can have with the rental company, the property management company, and you can go into the details of that. But it's a good question, but you don't take a hit because you're going with a Section 8 versus a cash client, okay? Now, a Section 8 client is also under the gun a little bit because if they don't do what they're supposed to do, this is the scary part. They get kicked off the program, and it's going to take them minimum 10 years to get back on.
Really?
Yeah. No, so you're going to do everything you can to stay on because someone's paying your rent. You have a big incentive to do it right. Okay. There are issues that come up now and again, but I haven't seen too many. Okay. Because you've got to keep your nose clean. You've got to do the things you got to do. You've got to do the retooling, your re-education. And there's a lot of things that are involved in a Section 8. The vouchers is one part of it. Okay. But that's the question that you want to have. you want to see right there. So, they can take that 320,000. You can buy a whole whack. I mean, you can go and buy at 90. If you can buy those houses at 90, that's going to give you another 3 properties you could buy at 90. And then if those properties go up again in value because they're going up in value or whatever they're doing, you can refinance that again and over again. I mean, this is just a money spinning concept in the States. It's just, there's nothing stopping the wheels turning. There's no, your loan to value ratio is too high. You can't borrow more money. You're out. You're going to pay big rates. You're going to go and find joint venture people and big mess. Out. Doesn't exist. And I personally, I don't like buying assets in Ontario, personally, because I don't like the numbers. I'm scared. I buy a $90,000 property. I know it's been renovated. I know the replacement costs because the specs are there, the comparisons are there. I know that if I get a little bit of rent for 1 or 2 years, I can refinance. I got no risk. If I pull 90 grand out and I borrow another 230 and I'm using all the assets to secure it, where's the risk to me? I love turning the risk over to the lenders. I love it. And that's the calculation model that I follow, that I've learned.
Question for you, Gary, from one of my audience here said, with Section 8, does the landlord goes after the tenant or government for damage in the dwelling? So who's going after the tenant?
The landlord is still responsible for everything to do with the property.
So if the tenants damage the property, you go after government or you go after the tenant?
No, you have to go, if the tenants damage the property, then they kicked off the program. We haven't had that yet. So I don't know how to answer that because I personally haven't had that at all. It hasn't happened. That hasn't happened.
Do you also, you look at
but ultimately, I would imagine, I would imagine that you're the landlord, so you would have to go like you would with any tenant and try to figure that out because that's your responsibility. All the government's doing is they're having a standard that they're suitable with. They're placing a tenant in there. They're checking up on that tenant within the program, and that tenant's receiving a rent voucher.
How do you find those tenants?
I don't. The property management company that I deal with in Michigan, in Florida, in Texas, they all, not so much now in Florida as much, and not so much in Texas, but Michigan is quite strong. They have an agreement with the federal government for the level of standards that they provide, the renovation work, and it's met the criteria. And so they have a certification with the government, and then they get tenants, and they're qualified tenants, and the government approves them and puts them in. And right now, the list is so long because COVID just moved everybody down the ladder, right?
Yeah.
So COVID has forced people to this. Some people are on Section 8 because it's got killed in COVID, right? Unfortunately.
True. Gary, we don't have much time, so I'm going to ask you a few questions.
So just this real quick. So if anybody's interested here, this is a statement from the state of Detroit, a Chamber of Commerce that was done last year. This is the content of it. It talks about the economics, the data, all the data you want. If you want a copy of this, you got to send me back. It'll help you with some data. All you got to do is take a picture of this. There's me right there without the beard. And you can just take a picture of that and I'll get you whatever information you want, or you want to know a little bit more about this. You can find out if it's something that works for you or not.
Okay, so
I'll leave the rest to you.
So excellent. Thank you very much for your presentation. I have a few questions. So number one, let's say I'm in Ontario. I go and get a line of credit. So is there anyone that I can knock at the doors that help me, Gary, to find these places? Is there any agent helping you?
Great question. Because we're not dealing through agents per se in the States, we're dealing through people that are basically offering, I only deal with people that offer turnkey packages at this level. When it comes to buying bigger units like medical centers and whatever, we'll place our own property management people in there. But at this level, when you're buying single families, duplexes, small multis, it's turnkey. They find the asset, you like it, they renovate it, they get it up to spec, you do the comparisons, it all passes good, it gets appraised, they put a tenant in there. Tenants normally take about 30 to 60 days you should give a tenant. It's happening quicker, but you never know, right? Right now, there's a lot of people, tenanting there's a high volume of tenants for brand new renovated places. And they take care of all of that, and you set up a bank account. The taxes is filed by the lawyer and the accountant. It's all turnkey. All you got to do is just, I tell people you should spend a couple of hours a month just managing it and you're done.
So you don't need to actually physically travel to US, find the tenant or find the property, evaluate the neighborhood.
No, all of that is done for people, because often what we find is that a lot of people are kind of, either they're seasoned investors and they're getting tapped out in Ontario. They got equity, they can't use it. They're looking for some, other opportunities. I'll just hit on some of the points for today, but and if they're not that, they're kind of like taking a couple of $100,000 on a line of credit, buying a couple of properties, getting $2 to $3 grand a month in cash flow, refinancing it down the road. These are important steps. Don't get me wrong, but they're not big steps. Going and buying something for $500,000 or $600,000 or $700,000 to me is a big step, okay? Because that could go, who knows, right? And I found that in Ontario, for the most part, I'm sure that they do exist, but for the most part, it's based on the appreciation of a property. I like in the States, I always talk about the magic formula. That's what we have learned. And the magic formula to me is you can have your money doubled every 4 years. And you do that by having an 18% return on your capital. And I get that from about 12% or 1% a month on my real estate, on the rental. And if I can get 0.5% a month on my property appreciation, add it together, I get 18, my assets double every 4 years. I can't even keep up with the refinancing. So
do you have to corporate a company in US or?
100%. You there's more than, you set up, we have some very strong legal cross-border people that do this. Remember, a lot of Canadians, the big Canadians have a big portfolio. The big multimillionaires have big portfolios in the States. So you have to set up a corporation. You have to know how to file it properly, because if you don't do it right, you can get double taxed. If you do it right, you pay very little in tax. Okay, you can have your whole life coming out of your American corporation. You can lease your cars. You can have your life. You can write off your wife. You can do a lot of things out in that environment if you want. There's a lot of things that are available to people.
So we can come to you, and then is there any extra fee for finding this place, like a funder?
Oh yeah, I want your first child. What do you want? I'm not cheap. Come on, man. Come on. No, there's because they're not dealing through a real estate agent. Okay. So people that come through us, that client that pay $91,500, that's what they pay. Okay. And so it's all built into there. That is completely turnkey. There is a couple of expenses on top of that 91,000. Setup fees, $1,200 to do the legals and the first year tax return. Property land transfers, about maybe $1,500. So maybe about $3,000 on top of that. But you explained all that in advance. It's really not that much.
It's like a closing cost.
Yeah, and then you can set up your bank account online, but eventually you got to go there and sign it. And so all the money's kept in trust until you go there. It's not a big deal. It's only a 3.5-hour drive on the 401 or whatever from Toronto. It's a gateway to other opportunities in the States that people might want to explore. I'm telling you, if I showed you some of the deals that are coming through that I see every day in the States, I'm going, okay, you have to understand, in the States, a lot of people are 70, 75, 80, 85 years old. They have hundreds and hundreds of doors, and their kids don't want to work at this thing and do anything. So they're just getting rid of or cleaning up some of their portfolio. That house was part of 8 houses that came in that portfolio. Same thing on 2 streets. So people, just like anybody else, they're trying to clean it up, sickness, health, this, that, whatnot. Yeah. And they're saying, well, after COVID, I don't want to go through this crap anymore, blah, blah. There's a lot of reasons why people are just doing what they're doing. Opportunities exist in crisis.
Well, that's why I like with US, the market is extremely creative in US. You can do many, many things. I find that you have to be a little bit more in touch than plug and, walk away. So you have to know what's happening, what's going on there. It's always good to be a savvy investor than sleep and let it go.
I don't think there's any kind of sit back on a couch investor, because I don't know if that really exists. If you get a little involved in it, you'll start to attract better deals because you'll be able to recognize them. So we have clients, for example, we show them, our vendors show these assets to people and they just pick them up because they know what they're looking for, the numbers. They know the areas. They've done their research. Yeah.
Good.
Can you get Gary's info again? Oh, sure. You can pull your screen up because you got my name and number on it.
Yeah, I try to see how can I do that.
Anyway, my name is Gary, Gary, and my phone number is 416-347. I'll put it in the chat, I guess, which might be easier for everybody.
Okay.
Here we can do this.
You want to give the control back to me?
No, I did, didn't I?
You did?
Maybe I didn't. I don't know. I thought I did.
Most deserve what is the screen share?
Yeah, I think I did. So there's my number, and for those of you that want to get me through email, here's my email right here. Bingo. There you go to everybody. So you have that. Is that okay, Luca? Why Section 8 rents versus market rents other than guaranteed income using the trade? No. Yeah.
Sure, there's info. Okay, so we have it here. And now, Gary, give my screen back to me. I know how to do that.
Okay.
Third host, disable. Okay, that's done. So what is the next step? Okay. Let me see.
You should have it.
I must have it. I don't know how to take over.
Anyways.
Okay. So thank you very much, Gary, for coming. And what do you see on the screen now?
Just the people, you and me, and just the self. So if you want to,
you'll see my.
Yeah. Anyone has any questions for me, I can put them in the chat or anything like that, or you can get hold of me. I have some videos and more data. I can send you some sites so you can do your research and you can go on the journey and see if it makes sense for you. I was this close to saying no 6 or 7 years ago, and that was a good thing I didn't. But so you know, okay. You can take a look for yourself.
Excellent. So this was the thank you very much, Gary, for coming. It was a pleasure to have you here. You're doing a lot of work, good work in the US, and I agree with many things you said. For those people who are interested in go to US, I personally believe that I still have a lot of gold mine here in Ontario, and that's the way it is. Some people, they like to do it, and that's a strategy. I always say real estate investment is a strategy. For some people, that strategy would work very well. So for other people, it's different strategy. Like we have buy and hold, we have flip. So these are different strategy. So I appreciate you coming here for our presentation, and hope to see you
anytime. Welcome to come back anytime you want, or speak about some other subjects relating to taxes and cash flow and real estate.
Absolutely. And if someone wants to get hold of me, my cell number is 647.
Why don't you type it in the chat there so everyone can see it?
You know, that's a good idea. 647
it's a little easier for you.
474049.
There you go. Just type in the chat, and then they can all get you in this real estate.
So you can always have access to me. Call me at 647-407-4049 every Wednesday at 7 o'clock. We have different topics. It's amazing what we had last week, this week, and next few weeks. Just fill yourself in information, become a savvy investor. So it's money, and control the money that is in your hand. You cannot rely to someone else to control and make money for you.
That's right.
You have to do that yourself. Thank you very much, Gary, for coming. And that is the end of our session today.
Thank you very much, everybody. Have a good evening. Hope to talk to some of you guys before. Take care. Bye-bye.
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 Bye.